I'm gonna go to the bathroom in just 1 second.
All right. And we are now live. So, hello and welcome to those of you joining us just a few minutes early. My name is Charlotte. I'll be your money show host for this session. I do have Omar here with me. He'll be right back, ready to begin his presentation on time at 12:30 p.m. Eastern Time, coming up in just a couple of minutes now. Thank you so much for your patience, and I hope you're enjoying the show so far. Hello, everyone, and welcome to the session. It is my pleasure to introduce Omar Ayales, Chief Market Strategist and Editor of Gold Charts R Us, a weekly trading service that achieves gains by trading stocks, bonds, and commodities. Gold Charts R Us has provided its members with cutting edge technical insight, allowing double and triple digit gains in trades year after year for over 20 years. To our live audience, please share any questions you may have in the chat box. Time permitting, we'll get to some of those at the end. And with that said, Omar, I will hand the mic on over to you. The floor is all yours.
Thank you so much. And hello, everybody. Thank you for coming to my presentation. Today is going to be all about silver. And in the next 30 minutes, I'm hoping that I'm going to give you enough information, enough tools so that you can either buy silver if you have not bought yet, or if you have a position of silver, you know, how much to hold, what to look for, when can we see the market turn, if it will turn. Today is all about the silver story. Okay, so before we start, please write down my email. It's OAYALES at aidenforecast.com. Then my website would be www.goldchartsrus.net. It's not .com, it's .net. Okay, so the reason for these is that at the end of this presentation, the slideshow, many of you will probably like the charts that I showed you. If you email me, I will share those charts with you. A lot of these charts are timeless pieces that will be good over the next few months. They're really good to be looking back and, you know, understanding always the primary trend and the longer term trend. Okay, so let's dig in. Okay. So I like to start explaining what's going on with silver. And then we're going to go in through some of the fundamentals as to why silver has been rising. And then we're going to go into some of the technicals, and then we're going to see some of the correlations of what other assets that are, well correlated with silver, what they're doing, and how they can help us explain silver's technical picture. Okay, and if if it adds to it or takes away or whatever it's adding to, the bullish sign. But we'll go through them one by one. Okay, this first slide that I have for you is basically showing what is one of the primary drivers of silver strength. Okay, so one of the primary drivers of silver strength, okay, is US dollar weakness. Okay, and it's not only silver. US dollar weakness accounts for probably price surges in gold, silver, precious metals, commodities, a range of commodities, and global currencies. Okay, so for those of you who haven't been paying close attention to the US dollar, it has been declining since it peaked in 2022, kind of like when interest rates peaked as well. They have been falling. The US dollar has been falling since. So that's nearly a 3-year decline that the dollar has been engaged in at this moment. That is no coincidence that the rise, for example, in gold and in silver is 3 years old as well, the intermediate rise, okay? And that's no coincidence, it's because they move in opposite directions, okay? So, for example, this chart that I'm showing you is to drive the point home regarding US dollar weakness. So you can see it relative to other currencies. So this chart, starts from January 2025, this year. It's 6-7-month-old chart, okay? And this chart basically indexes to 100 the different price movements of different currencies. I here have the Swiss franc, the euro, the British pound, the Japanese yen, and the US dollar index. You see the US dollar index is in red, and you see stark opposition to the rest of those currencies. Okay, the dollar has basically tanked in the past 7 months. It has declined nearly at 10%. Okay, nearly at 10%. This, in my opinion, has been one of the main drivers for silver strength. Why has the dollar fallen? Well, there's a host of reasons. Okay, and again, I'm going to say some that are probably more short term, but there are others that are more ingrained. Okay, but some of the more intermediate reasons as to why the U.S. dollar has been on the decline has been like global investors, central banks, large institutions, retail institutions, countries have been moving away. Investors have been moving away from the U.S. dollar as a reserve currency, as a reserve status, as an asset for safe haven, as a reserve currency. That doesn't mean that it has been completely dumped, that is, in the trash. No. It just means that there has been a rebalancing or a shifting away from the US dollar and into other products. Okay, so for example, this also coincides with the decline in US treasuries. Like for the past, many years, 3 years, US treasuries have also been on the decline, long-term US treasuries. This is also, central banks, big institutions moving away from long-term US treasuries as a safe haven instrument. Okay, not that they've dumped completely all of them into the water, but they have been divesting from them consistently. This has been putting downside pressure on the US dollar, okay, and upside pressure on other commodities, specifically gold, because as many as you probably know, gold has been one of the main assets that central banks have been accumulating, or that they have been accumulating in exchange for the US dollar. Okay, there's been a change of shift or US dollar. When I say US dollar assets, right? US treasuries, assets that are priced in US dollars. So here you see, very clearly how the dollar has been falling, and even though it's fallen 10%, which is a lot, and 20% if you take it since the peak in 2022, it could fall lower. My target on the downside is about 90. Okay, that ongoing decline is very likely to continue boosting precious metals, specifically silver, gold, up higher. Okay, now of course the US dollar is not going to go down forever. Okay, but for the for the foreseeable future, for the rest of this year, it's very likely that it will. Now, what is the number that I see on the US dollar index on the upside that kind of gives me a little bit that scares me a little bit when I see if the dollar's rising too much, that I could see maybe a shift, a paradigm shift, would be on the US dollar index, okay, 104.5. As long as the dollar index stays below 104.5, it means that the US dollar is weak. If it eventually breaks above that level, and stays above that level, we could see a mega shift, intermediate trend reversal, where the dollar could basically snap out of the decline and start to rise once again. We're not there yet, but it's a key level to keep your eyes on. If at some point that level is broken, it should be telling you that you should, that things could change, and that we should be maybe looking to, if not already at that moment, selling some of those assets, okay, of some of the precious metals, some of the commodities, some of the other things, because that would be indicative of probably like a strengthening US dollar. So one of the reasons that has been fueling US dollar weakness has been, of course, the Trump administration's international rhetoric regarding trade, tariffs, and these types of things. Okay, of course, Trump is always loud and very clear and very defined, and sometimes it rubs people the wrong way, and there's a lot of commentary, bearish, bullish regarding it, but ultimately the things that he are doing, in my view, are actually positive for the U.S. economy. Okay, the tax cuts, is eventually going to put more money in the consumer's pocket, is going to be boosting corporate earnings and profits, and that's just going to push valuations upward. Most likely, we have trade deals being announced. For example, the trade deal with Europe was a big win for the Trump administration, and it's like that we will continue to see more of those trade deals happen. The trade deal between US and Europe is huge because that accounts for about 50% of global trade already. So, that is massive. So, as those things start to clear up, it is very likely that, more certainty will start seeping into the markets, and that could eventually turn into US dollar strength. Okay, now the tariffs. A lot of people are concerned that the tariffs are actually going to, derail the economy. They're going to contribute to inflation. And look, they might. They haven't really thus far, but they might not. And why is it that they might not? Okay, there's different reasons. First of all, the tariffs don't necessarily go directly to the consumer. Okay, from the moment that a consumer buys something outside of the country to the moment that he receives it, there are a lot of different participants in that chain. And it's very likely that the participants at the different parts of the chain will all assume part of that cost. Okay, so it's not going to be like a sales tax that, just at the final price, 15% or 10 or 50% is added, right? It's throughout the chain. Number one. Number two, there have been a lot of things that have been actually falling in price. So for example, like if you take, the average crude oil price of the past 6-7 months, it's around $65, okay? And you get the price of crude oil, the average during the Biden years, it was at least 10%, right now it's 10% lower than the average during the Biden years. So that 10-15% lower where the crude oil is today, that translates in direct savings at the pump. That is to offset, any increases due to tariffs. And then same goes to the tax cuts. The tax cuts are putting money in corporations' pockets, or in their balance sheets. It's putting money into the consumer's pocket, and all of those are very likely to erode or offset some or any or all those. It's yet to be seen of the impact of that the tariffs might have. Okay, so don't be too ready to think that the tariffs are a bad thing, or that they're going to derail the economy or create, a runaway inflation. They might not. And actually, one of the things that we could see is that we could see the U.S. economy strengthen, based on the different policies, which can translate into a stronger dollar. Not for the rest of this year. I think the rest of this year, the dollar will stay with downside pressure and moving to the downside. But we're talking about more like longer term, more over what could happen over the next, a year or 2 years from now. Here, like I had been saying, like before, one of the main reasons for the decline in the US dollar has been the exodus, a massive exodus from long-term US Treasuries over the past 5 years, especially since 2022. Central banks across the world have been divesting, and this chart is really interesting because this chart is from 1930s, okay, and it captures the mega shifts, mega trends in long-term treasuries. So the treasury market, especially the long-term treasury market, tends to move in secular markets of about 30 to 40 years. So you see, for example, the last time that we were starting an inflationary era, okay, that lasted 30, 40 years, was back in the 40s, right? Right after right during the Second World War, right after that, and the post-World War economy. And we see that the long-term yield in US Treasuries rise from 1941, okay, thereabouts, to 1980 when rates peaked. Okay, a lot of you probably were alive then and seeing what was going on. And they peaked at that moment. Then they peaked, and then rates started to fall. And then as they fell for another 30, 40 years. And they shifted once again back in 2022. There was a mega shift where, once again, for the first time in about 40 years, the yield on a long-term US Treasury broke above this red line, which is an 80-month moving average. And everybody's always asking me, like, why so long? And so, well, the reason is because, like, this is a perfect indicator to capture these long-term movements. So whenever we see that there's a clear breakout or breakdown out of this red line, it tells us that something bigger is brewing. So that break in 2022 to the upside in US Treasury yields is telling me that we have already started the path of the next era or cycle of higher rates for longer. So you should expect to see higher rates over the next 30 years, long-term rates, okay? And what does this mean? This means that the US bonds are probably going to continue to fall. And why is this? Very likely as the central bankers continue to divest from US Treasuries and US dollar holdings and continue to add other types of holdings in other currencies or gold itself. The price of gold is very clear to see how the shift has that shift into gold by institutional investors such as central banks, okay, has been helped the price of gold. There was a big year in 2019 for gold, and that was when the BIS had agreed to include into their charter an amendment that actually came into effect this year, where gold would be considered a tier 1 asset and therefore would not be penalized as a reserve, and 100% of the value of the gold could be used basically as a reserve, as a safe haven and reserve asset for like central banks. So this was a game changer that I believe it's not a big coincidence why people have been, why central banks have been divesting from US dollars into gold. Now gold basically has the same appeal as US dollar, meaning, from a regulatory point of view. And, I think in the same conditions, central banks have been favoring gold over the dollar. Also, we have seen, the fall in the dollar has also contributed to a rise in resources and rise in resources, especially some energy, not crude oil, but other energy such as nuclear and uranium and other sources. Yes, but basically copper and resources have also rise when the dollar falls usually. And you can see in this chart, since 2020, copper has had an amazing rise. Okay. And actually rose to new highs just recently, spiked up with the whole tariff story narrative surrounding the import of copper into the US. Okay, but then ever since that fear went away, then of course the price of copper gave the price gains based on that, gave them back. And that's the big decline that we saw over the past couple of days. But as you can see, also copper is holding above that uptrend since 2020, and I do believe that it could continue to rise with US dollar weakness, with the ongoing declines in US Treasuries, and in that same trade, in that same light. You see, for example, like copper. The reason why copper, one of the reasons that copper stays strong is that, copper is used in everything. It's a highly used industrial metal, and it's used in all sorts of applications across the world, in construction and chips and all sorts of stuff. Okay, so whenever you see the stock markets or the economy perform, strong economies, that usually tends to coincide with strong demand for copper. So for example, this next chart that I have indexed to 100 between copper, the S&P 500, and an emerging market fund, it's about 50% China. You see the movement since March 2020, since the COVID lows, index to 100, so we can see the relative strength of these three assets, okay? You can see that the S&P 500, okay, that's in blue, actually is the one who has been outperforming everybody. That's been on the rise steadily. Something happened around 2021 when the S&P 500 and the EMF decoupled, okay? And we saw that the EMF actually collapsed while the S&P 500 stayed strong. And it is only until this year, if you see the most recent up move breaking above that peak of 2024, it is only until this year that we're starting to see a shift to the upside in emerging markets, okay? While the S&P has stayed strong. So if the S&P stays strong, given the fiscal stimulus that is being passed in ways of lower taxes, in ways of certainty with trade agreements, in ways of lowering of, like energy costs from, the lower crude oil, these things, it can be expected that the S&P 500 will likely stay at the higher levels or even rise even further. It is also likely that this trend that has just broke out in emerging markets will continue. And if both the S&P 500 and the emerging markets are strong, that is going to be a double thruster for copper. The reason why copper is so important, okay, and here it comes to our main issue. The reason why copper is important is because silver is also an industrial metal. It has a highly used industrial application, and even though it's also gold's sister and it moves with gold, it also moves with copper, okay? So silver ends up moving with both, okay? And especially if we see strength in both gold and in copper, it's almost a perfect storm for silver, okay? Right now, silver has been inching up, and actually of all the different precious metals is the one that has been lagging the most, okay? And there's really, there's no fundamental reason for that. Technically speaking, actually now the picture is so much better. Not only like because of the strength, the correlated picture with the strength in gold and strength in copper, but now that we're going to see this chart, you're going to see that technically silver is also very bullish on its own, just by its own price movement. This chart that is since say a 20-year-old chart, nearly 20-year chart with a 65-week moving average, which is the red line, shows us what are the steps that silver had to have overcome so that it can continue to gain strength and be able to rise to new highs. The first step was broken back in 2020 when silver, broke above $20. That was a huge milestone. Okay, then another big milestone was around $26. Okay, then silver broke that in 2024, 2023, 2024. Okay, and then the more recent milestone that in my opinion was one of the strongest and most gruesome resistance levels was the $35 level. And that's because if you take this chart back to 2011, you can see that, like other than that, like burst peak that it had, 2011, the $35 level was the more consistent level where it actually held that. Okay, and we see that now silver broke above that level, it has held above the red line, and right now the picture for silver is very bullish. This picture tells me that silver is very likely has already an open situation, an open door, to rise to the $50, the old record. Okay, $50 an ounce, the old record. And this will happen as long as silver stays above $32 or the 65-week MA. It's always good to allow your positions to fluctuate a little bit. Don't be, so ready to sell or be getting worried if, there's a pullback or something. Of course, we have to take into consideration always the fundamentals. We have to take into consideration the correlations, and we have to take into consideration the technical picture of the asset itself. There is no one single element that will tell you exactly what is going to be the future or what's going to be, where is it going to break towards, okay? It's a combination of things. And when we see that there's strong fundamental picture, a strong correlation with assets that tend to move together are also outperforming, right, outperforming other market assets, you know, in commodities, then and we see the technical picture already breaking critical resistance. You know, when you zoom out and look at the forest for the trees, it's a very bullish picture. And one that, you know, you want to bet on. You know, so look, and honestly, like I was saying, you know, like it's not only silver by itself. It's not that silver has this very special condition that is making it, you know, jump, kind of like what happened with copper, right? You know, when the with the whole tariff narrative, and all of a sudden we see a spike up. Well, we all knew that that wasn't going to be sustainable because it was something regarding an issue that was probably going to get resolved. Okay, and it did, and copper, you know, surely, you know, just came back. Silver's rise thus far has been solid, you know, has been on strong fundamentals. It hasn't had weird, you know, like bursts to the upside or anything. It actually has been very strong. And when you see this chart, it's not only been silver. Of course, we already saw gold has been outperforming, but we see also platinum, palladium, you know, and of course, well, copper. I mean, taking away this most recent movement that there's a little drastic, but we see that really everybody has been, all of these assets have been uptrending at the very least. We see platinum just broke a critical resistance just this year. We see palladium, you know, rising and breaking critical resistance also. You know, we see these precious metals all rising, and they're all creating a bullish picture for silver moving forward. And not only that, well, you know, here also the gold shares. But the reason I didn't mention the gold shares then is because I have a specific slide just for gold shares. Okay, so also, you know, and I have here for gold shares, you know, I mean gold and silver shares. Okay, you know, generally because both are mined, you know, in the same place. Usually, you know, one is a byproduct of the other, but they're usually mined together. So, you know, gold and silver shares. You know, I use the HUI index, okay, just to kind of like monitor, like, you know, broad movements of the sector. Okay, so we see, for example, in this chart, instead of just showing you like a chart of the HUI index, which I do in the top left corner, you can see that this is only the HUI. It has been on a bullish run. Just this past week, it broke above, back to a new high of around 460. Very strong price performance. That's telling me that the HUI index could rise all the way to 600, which was near the peak in 2011. The peak in 2011, I think, was even over 600. That's almost a 25-30% rise on the index. You know, that could mean like many of the companies could, you know, even double or triple before this move is actually over, even though the move already has been going on for a while. This chart is also telling us that gold miners have been super strong. They've outperformed basically everybody else. Okay, they're outperforming gold, as you see that they're breaking out. They've outperformed stocks. Okay, the S&P 500. They've outperformed bonds. Okay, so the gold shares are very strong, and strong, healthy gold silver shares are very. It's a strong indication of a momentum and strength within the commodity itself. So here's the last of my presentation. I wanted to leave a few minutes in case if we have some questions and answers. I also have some specific recommendations in silver. You know, some of the companies that I really like in silver. You know, we talk about senior companies. Wheaton Precious Metals, WPM. I think it's really good. And some of and you know, that's to have like a solid, you know, like asset there holding your portfolio. But then I also like, especially now that we see that we're maybe like at the tail end of this like massive move in precious metals. I like the junior mining space just because, you know, like right now is when we can start seeing some speculation driving those prices higher. Some of the juniors that I like Vizsla. I think Vizsla is a great junior silver miner. The ticker is VZLA. It's a Canadian company. I also like Avino. It's gold and silver in Mexico. Okay, but silver right now is their strongest production, and their ticker is ASM. Okay, they're also a Canadian company, I believe. And then one of the more new ones that is an exploration company. So, you know, they're not really yet in production. The other two, Vizsla and Avino, are in production, but this other one is not in production. So there's a little bit more speculation. It's called Kootenay. Okay, so it's on the pink slips. If you want to look for that as well. So any questions?
Yes, Omar, we do have a couple of questions here. First one from Eddie. I think you may have covered it in your last slide there, but he had asked, silver has outperformed gold this year so far. Do you think it will continue to outperform for the rest of this year?
I do believe, and the reason is because really gold already has had an amazing move, and I think it's not over yet. But silver is still lagging, on that big move, and usually silver moves stronger than gold. So I think a move over the next few months of silver to $50 would not be unreasonable.
Thanks, Omar. And then the other question we have here is from Initials NN. They're asking, will platinum and palladium outperform silver this year and next?
Well, I believe that platinum, might have been outperforming silver this year, just with the more recent up move. We would have to do the calculation to see exactly, but it is likely. I mean, it had a very violent up move more recently after staying pretty much like in a sideways band for a while. I see also similar with palladium. I see more volatility in palladium, and it's staying near the highs, but it's very likely. And again, I think that one of the things that I was saying is that if we do at some point over the next year, 2 years, see a shift, from to a better circumstance for the economy, when things come together with, like the tax cuts, the more certainty regarding the trade situation globally, and other aspects, okay, and improving emerging markets, and strengthening of other economies and this type of thing, it is very likely that we're going to see a demand for resources strengthen even more. And that means that, like the resource metals, especially copper, palladium, and others, of course, the base metals, will probably do very well. And right now, I think that they're actually, especially the miners or the producers of those in those are still cheap.
Thanks, Omar. And in this last minute that we have here, we just had a couple of people asking if you can repeat the stock ticker symbols for the Pink Sheet Junior and a couple of the other ones you had mentioned at the end here.
Yeah, absolutely. For the Pink Sheet Junior would be KOOYF, and that the name is Kootenay Silver. That's in Canada. Okay. Then I like ASM. That's Avino Gold and Silver. They're based out of Mexico. They're a Canadian company. They're a junior producer, so they're actually in production already. They're cash flow positive. The other one that I really like is Vizsla. Okay, the ticker would be VZ or ZLA. Okay, and also it's a junior Canadian miner producer, but they're just doing things really well, and I really like them. And even though they're juniors, they're phenomenal. Really, I really like them. There are others that I have here also. For example, I have a AYA Silver and Gold, also a Canadian company. Pink Slips would be AYASF if you are interested in looking at that one. But I would encourage you to look at Vizsla, Avino first. Okay, and of course Wheaton Precious Metals, which is more of a senior type of company. They not only produce silver, they produce also gold and other precious metals. They were a junior a long time ago when we started investing in it, and now they're just an awesome producer. WPM is their ticker, and they're just a fine company and a good a good like stronghold to have in your portfolio.
Well, thank you so much, Omar. I know our audience definitely appreciates that you took some time here to answer their questions. Fantastic presentation. We're getting some thank yous in the chat right now. So it's always a pleasure having you on our virtual expos. And as always, great job.
Thank you so much. And thank everybody who came to the presentation. Remember to write down my email, oyales@aidenforecast.com. If you want my charts, just email me. I'll be more than happy to share them with you.
Wonderful. I'm going to go ahead and put that into the chat for those of you watching live. And again, to our live viewers, please be sure to stay tuned as we have some more in store for you today in this Money Show Virtual Expo. I hope everyone has a wonderful rest of your day. Take care.